Hey everyone, happy Wednesday, happy hump day. Coming in today because we had a great session on Monday about investing in the stock market, and I received a few emails about one of the um, indicators or one of the websites that I use to do historical searches on stocks to see how much you could have made if you would have invested um, a few years back. So today I wanted to just focus on that um, site and popular stocks that will show you that there's no more time to waste. The time to invest in the stock market is now. The one thing you will regret 10 years down the road is that you did not invest sooner, but you will not regret investing in the market. And with that being said, before I dive in, I just have to do the caveat and disclaimer. I am a investor. I am not a financial accountant. I'm not a financial advisor. I am not a fiduciary. So everything that I'm saying is based on my experience and research that I have done and I'm sharing with you. So let's just go ahead and share the screen and get started. And I'm just going to take you through. Um, let's just find the screen. I'm going to take you through some popular stocks that um, that I'm sure if you don't invest in um, from a consumer standpoint, someone in your family does. So let's just go ahead and try to share the screen. Oh, here we go. Okay, perfect. So I just want to make sure on my end is showing. I just want to make sure that you can see it. Okay. I don't know. It doesn't look like. Okay, here we go. Add to stream. There we go. Perfect. So let's go ahead and get started. This website is called FinMasters. And you can see it's at finmasters.com. And we're just going to walk through the top stocks in the 11 sectors. So for you, those of you that don't know, and if you're very, very new to investing, please, I added a link to a video, the video from Monday that talks about the basics of investing in the stock market. So go ahead and check that out when you have time. But there are 11 sectors within the market, and I'll just ramble them off before we go into the actual stocks. But the first, well, no particular order. You have industrial sector, you have the information technology sector, healthcare, real estate, financials, consumer discretionary, energy, consumer staples, utilities, materials, and communication. And if you guys like this, I'll do this on a regular basis. I'll probably come back again during our basics of investing training over the next few days. Just to answer a few more questions. But if this is something that you guys like, you could always do it on your own, but I could come back and just go through some examples. So let's get into it finally. Okay. So I am actually going to start with the industrial category. So most of us use UPS, right? That's one of the big industrial companies that you can invest in. And I just want to show you some examples. UPS, United Parcel Service, you put that in the first line when you select a stock. I'm going to use the purchase date as December 7th, but I'm going to change it to 10 years prior. So instead of 2022, we're going to do 2020. And I'm going to show what $1,000 would be worth today. It will calculate that number. And voila, if you would have invested $1,000 in UPS on December 7th, 2012, without doing anything else, that $1,000 today would be worth $3,200. And this is in a down economy, correct? So when the economy starts booming, so will your profits. And let's just go to another. Um, I'm going to do one in each category for $1,000, and then one in each category for an initial investment or total investment of $500. So the next category is information technology. So let's just do the most popular because I did this in the class on Monday, but Apple is one of the most popular, not only brands, but also stocks to own. Has one of the highest, it is worth, I want to say between, well, Amazon is down now, but it is one of the top companies in the world. And so let's just keep the dates the same. December 7th, 2012, $1,000. You calculate that. And what do you get? $8,700. Why did I go back? Sorry about that. Yes, so $8,725. And that's without doing anything. An annual rate of return of 24%, a total increase of 772%, and a total profit of $7,700. I'm just rounding the numbers. If you would have put that same $1,000 in a bank, you would have averaged a total return of $100 at anywhere from 1%, or over the last 10 years, I think the average was about 1% return in a standard savings account. So let's go ahead to healthcare. And healthcare has been, very popular. I decided to just do, I haven't looked these up, I just wrote down names. So Pfizer. Let's see what Pfizer's been in the news a lot lately. And so if you would have invested $1,000 on December 7th, 2012, that $1,000 would have given you an 11% return, which is still, what, 10 times greater than if you would have put that money in the bank. And who wouldn't want their money working for them this hard without doing anything else? That $1,000 would have turned into almost 3,000. The next category we're going to look at is real estate. And Simon Property Group, a lot of people, it's, gift giving time. So we, shop in malls, and a lot of the malls around the country are owned by Simon Property Group. So let's just see. Again, I just wrote these down so that I would have something to go by. So yeah, so retail has been down over, especially since um, you know, the last couple of years. But you still beat the rate of return that you would have gotten if you would have put your money in the bank. So instead of getting 1,100 in 10 years, you would have, your rate of return would have been 2.28%, and your total profit would have been $253. So next category is the financial category. So that's really like the banks um, and primarily banks and financial institutions. So I don't know. Let's do Bank of America. I have two here, and I put down Bank of America and J.P. Morgan. Where's the Class A? I'm trying to find Class A. Hold on. BOA. BOA. Let me see Class A, but maybe, okay, so maybe it's the Class B that's available to the average No, that can't be it. Okay. You know what? Sake of time, let's do JP Morgan. I'll come back to Bank of America on um, another video. So yeah, so JP Morgan, you have the same date, December 7th, 2012, which is a 10-year period. Um, $1,000 is the investment, one-time investment. Calculate 15% return. And that, look at that. The total profit would have been over $3,080. And that's with, again, not doing anything. So we're coming back tomorrow with the second part of the basics of investing for independence. Um, Go ahead and, check it's listed. So go ahead and turn on the alarm so you're notified when we go live, but it's 7 p.m. Eastern Standard Time tomorrow. And we'll talk more about compounding interest and how this money is able to work for you and grow. But this is how, I'm able to live a semi free life, right? I was lucky enough to work at a brokerage company before my first year in college and was taught about the power of the stock market. And so that led me to investing a few years later. And I'm a long term investor. Primarily, I also trade, but most of what I do is long term. And this is why I wanted to share this information with you because it's definitely a powerful tool that we as a culture are really just learning. And I'm not talking about trading. This is long term investing. That's why I'm using the 10-year time frame to show you that the more time in the market is better than trying to time the market. So yeah, so let's go on to another category. We're going to go to consumer discretionary, and that's companies like McDonald's, Nike. I think I did Nike um, in it's in the replay from Monday's class. So let's just look at McDonald's. Because we know we spend some money on some fast food. So let's see what that looks like. December 7th, 2012, $1,000 investment would be worth today, again, over $4,000. And that's almost a 15% return with a total profit of $3,040. Listen, I am going to go through a few more examples. Feel free to stay. And watch. But again, if this isn't hasn't sold you already, then I don't know. I don't know what can. And think about the $1,000. We're talking about $3 a day, just over $3 a day that you are investing or you're saving. And again, the goal is not to only get you to invest $1,000. It would be great. Let's just say for 10 years, you were to do $1,000 a year. This number will be exponentially greater. So, but I just want to show you that, the rates of return that you're getting in the bank currently, even though inflation rates have gone up, so interest rates are also going up, it's still um, not the most profitable way to invest your money. You have to pick smart companies, sound companies, and we're also going to talk about that in basics of investing. So don't forget, go ahead and hit that notification bell. We're back tomorrow at 7. And then the final class for the 3-week installment is on Monday. So let's just go ahead and move on to energy. Now, energy has been beaten down, but I invest in some energy companies. So let's just see. Chevron. Let's see what Chevron would have netted you. So Chevron on December 7th, 2012, $1,000 investment. Okay, almost a 10% rate, well, 9.28% rate of return, a total profit of $1,400. Where else is in the video from Monday, Steve Harvey made a poignant point. He dropped a gem. There's no place else where you're going to get your money to work as hard as you will in the market. So, yes, real estate is another powerful tool. But again, the stock market is controlled by 89% of the wealthiest individuals because they know the power of the market. So moving on to consumer staples. Um, well, I'm going to go to utilities. I'm sorry. Utilities first. Let's see what um, Duke Energy I wrote down. So let's just see Duke Energy. Not, excuse me, Duke. Is it Duke Power? I think it might be Duke. No, Duke Energy Corp, but it's listed for some reason not under energy, it's under utilities. But let's see what $1,000 would have netted you. Okay, another decent rate of return. It's on 9% and more than you would have gotten if you would have kept your money in a standard savings account. And let's keep going. Materials. Materials is like steel, and there's a couple of companies. So let's do the Dow Inc. Excuse me. Same date. Oh no, that's 2019. Let me see. Did I? Oh, you know what? Let's do steel because Dow might not have been active in 2012. I don't remember, but let's just do steel. Okay, 3%. But the point is, 3% is better than 1%. And that's what you want to think about as you are either building wealth for yourself, retirement, your children, your grandchildren, nieces, nephews, whatever. You want to be able to buy solid companies, hold on to them for the long term. There's also a video that I'm going to share tomorrow about if you were to invest in your, I think 16 or 15-year-old, and there's numbers, I don't remember them offhand, but I'll show the video on Thursday. A small amount, they're showing you how you can create millionaires for your children by not investing a lot of money. So again, I will show that video. I shouldn't have really talked about it just now, but I'll show that video on Wednesday. Excuse me, on Thursday. Today is Wednesday. And then the last category is the communications category. And that's companies like Google, mobile, your cellular mobile companies. So let's just do Google because everyone uses Google. So let's just see what that would have been worth. Wow. So if you would have invested $1,000 10 years ago today, that $1,000 would have had a rate return of almost 19%, total of increase of over 465%, and a total profit of $4,652. Amazing. So right now I'm going to rapidly go because some people may be like, okay, well, I don't know if I can find an extra, you know, $3 a day, $1,000 a year. Let's look at what $500 would have gotten you. Um, and we're looking at $2,800 for Google. But we're just going to play with a couple more companies, and you can see that it doesn't take a lot. Start out with what you can and then grow as you can. You get income tax returns back, you take a portion of that and you invest it. You have a side hustle, you make sure you take a fraction of that and invest it. But the key is not to wait to start investing now. So let's look at, let's say, Microsoft. $500 10 years ago, $5,600 today, over $5,000 profit with a increase of over 1,000%. Like these are the companies that have paid off over the last 10 years. The key is to know what to look for companies that will pay off in the future. And we're going to talk about areas and industries that are poised to completely take over in the future, from robotics to cybersecurity to artificial intelligence, and the list goes on. Health care, of course. And so we'll talk more about that within in the next two sessions of basics of investing. So yeah, so I really just wanted to come to you today. Um, if there are, more that you want to, if you want to, excuse me, if you want to review more, if you want to review more companies, join us on Thursday and Monday. If you're missing this and you're watching the replays will be on my channel under live. It's called Basics of Investing in the Stock Market. But once again, um, hurry up and let's start, stop making excuses and start investing, because this is the only way we're going to achieve independence. It's the only way that our kids are going to have a chance in this country. You're familiar with what's going on with these elections and what's happening in this country. And so let's poise ourselves for success. And again, just a quick drop in and stop by because questions were asked. And I hope you got the website. Let me give it to you again. You can do your own work. It's called finmasters.com. It's the stock calculator. And I'm going to come back on Thursday and also show if you would have invested $1 a day, or someone would have invested $1 a day from the date that you were born, you can figure out how much that dollar would have been worth, or what that investment would have been worth today. So again, thanks for tuning in. Oh, and I didn't call out you know, my little merchandise. I can't really show you, but oh, there you go. So join the woke community. We want to stay woke, and woke simply means wealth is obtained through knowledge and education. Um, like Ice Cube said, and I mentioned in the last video, we have no power in a capitalistic society if we are not viable investors and do not control any wealth. So let's just go ahead and stay woke, and let's get this knowledge and let's get this education and let's execute on it. Okay, so everyone take care, and I'll see you tomorrow, 7 p.m. Yes, 7 p.m. Eastern Standard Time. Take care.